Buying a home can be a nerve-wracking experience, especially if you're a first-time home buyer. I put together some tips that can help you navigate the process, save money, and avoid common mistakes. In the second video of a 4-part series, I'll be talking about mortgage application tips. Tip number 1, determine how much home you can afford. Before you start looking for your dream home, you need to know what's actually within your price range. Use a home affordability calculator to determine how much you can safely afford to spend. Remember this rule of thumb: your monthly payment should be no more than 1/4 of your monthly gross. Tip number 2, check your credit and pause any new activity. When applying for a mortgage loan, your credit will be one of the key factors in whether you're approved, and it will help determine your interest rate and possible loan terms. So check your credit before you begin the home buying process. Dispute any errors that could be dragging down your credit score and look for opportunities to improve your credit, such as making a dent in any outstanding debts. To keep your score from dipping after you apply for a mortgage, avoid opening any new accounts, such as a credit card, an auto loan, until your home loan closes. Tip number 3, compare mortgage rates. Many home buyers get a rate quote from only one lender, but this often leaves money on the table. Comparing mortgage rates from at least 3 lenders can save you more than $3,500 over the first 5 years of your loan, according to the Consumer Financial Protection Bureau. Get at least 3 quotes and compare both rates and fees. As you're comparing quotes, ask whether any of the lenders would allow you to buy discount points, which means you could prepay for interest up front to secure a lower interest rate on your loan. How long do you plan to stay in your home, and whether you have money on hand to purchase the points are 2 key factors in determining whether buying points makes sense. You can use a loan calculator to decide whether it makes sense to buy points. Tip number 4, get a pre-approval letter. You can get pre-qualified for a mortgage, which simply gives you an estimate of how much a lender may be willing to lend based on your income and debts. But as you get closer to buying a home, it's smart to get the pre-approval, where the lender thoroughly examines your finances and confirms in writing how much it's willing to lend you under what terms. Having a pre-approval letter in hand makes you look so much more serious to a seller and can give you the upper hand over buyers who haven't taken this step. Just remember, stay alert to all your credit activity when you begin this process. Something as simple as a late payment can impact your ability to secure a loan. Avoid any lifestyle changes until after closing, so avoid any big purchases. To make sure you stay up to date with this and other tips and tricks, be sure to hit that subscribe button. And if you found this useful, give it a like and leave me a comment below.